Hi, I'm Marty Nemko. Investing advice from a guy who isn't a licensed financial advisor. I have an advantage over licensed financial advisors. I have no skin in the game. Also, by temperament, I am a moderate, and so have learned how to optimize risk-reward while reducing stress. And my investments performance over 30 years has solidly beaten inflation with relatively low risk and stress. Here are the principles I follow, updated per my decades of experience. Don't chase above average returns. They tend to come with risks in excess of the likely benefit. When I was young, a mortgage broker friend said he himself was making a loan on a home with the interest rate well above prime. He encouraged me to join him, and I invested $20,000. It ended up being worth zero because the property appraisal was inflated. The owner borrowed the maximum he could and then walked away. Now, I am not piggy. I invest in quality assets and try to get a good deal merely by selecting firms that are reliable and charge low expenses, like Vanguard, BlackRock, or Schwab. Invest where your money won't be absconded with. The aforementioned large firms also have the advantage they won't run away with your money. A friend touted an independent investment advisor, one-man shop. I visited him and had a funny feeling, so I didn't invest. It turns out he was running a Ponzi scheme. Buy and hold. The more you trade, the more you accumulate costs. Capital gain tax, buy-sell spreads, and perhaps transaction fee. By choosing blue-chip companies likely to remain leaders in categories that are likely to do well in good times and bad, I feel confident using a buy and hold strategy. Examples: Amazon, Goldman Sachs, Procter & Gamble, Apple, and Johnson & Johnson. Even more so, I invest in Vanguard exchange-traded funds, ETFs, which give me diversification at low cost. I've chosen Vanguard Growth Index Fund, annually $5 per $1,000 invested, and Vanguard Emerging Markets Fund, annually $13 per $1,000 invested. If you want an even easier approach to diversified low-cost investing, consider a Vanguard all-in-one fund or a BlackRock multi-asset fund. They come in different levels of risk tolerance, that is, a different ratio of stocks to bonds, the latter which are less volatile but historically have lower rates of return. Another advantage of buy and hold is that you're less subject to psychology hurting you. When we see price of a stock or ETF go up, we tend to think it's a winner, and so we're tempted to buy more of it. When that stock or ETF is going down, we tend to sell. So we are often buying high and selling low, obviously the opposite of what we want. Automate your investing. The aforementioned psychology risk is mitigated by automating your investing. For example, have a fixed amount invested from each paycheck, or if you're self-employed, make a rule for yourself such as every time I have $500 or more that I know I won't need, I'll invest it that day. That also gets your money working for you as quickly as possible. Take advantage of tax advantage plans like 401ks, 403bs, 457s. That allows your money to, even companies that issue dividends and capital gains, those don't get taxed until you retire. So your interest is earning interest on your interest is earning interest on it. I'll tell you more about that in a minute. Reinvest interest, dividends, and capital gains. All ETFs and mutual funds and some stocks allow for automatic reinvestment of dividends. Not only does that keep your money working for you as much at a time as possible, it capitalizes on the benefits of compounding. Those dividends, thus invested, can earn more money, and that can yield remarkable results. Indeed, Einstein called compounding the eighth wonder of the world. For example, if you invested just $100 a week in an investment that yielded 5% a year, thanks to the miracle of compounding, in 20 years it'll be worth $172,000. Cryptocurrencies such as Bitcoin should be viewed as a speculation. There is no product underlying cryptocurrencies, which is why Warren Buffett advised against investing in cryptocurrency. If Trumpian policies are transient, cryptocurrencies may fare poorly. Don't think of investment as recreation. You'll note that my investments are index funds, market baskets of stocks, no financial guru trying to pick winners. Research finds that in index funds, unselected market baskets like the S&P 500 do better than 85% of actively managed funds. And we can't predict which 15 are going to do better, in part because we can't adequately enough predict, in part because fees can be lower, no set of gurus to pay for picking stocks. Also, index funds are invested in many stocks and hold most of them, so they're less volatile than individual stocks. That's boring. Fine. That's one less thing to worry about. You need an adrenaline rush? Play or watch a sports game, or debate the Trump presidency with someone who holds a different view from yours. Again, these are merely personal opinions which have long worked for me, but before investing it may be wise to consult with, a licensed financial advisor. In any event, that's investing advice from a guy who isn't a licensed financial advisor. As usual, I welcome your thumbs up and accept your thumbs down. I always look forward to your comments and especially like it if you hit the share button below. Share on your social media so that my efforts can have broader impact. And I am flattered if you choose to subscribe to my channel. And certainly would welcome you taking a look at any of my 35 books. Perhaps most relevant to this is How to Do Life, but all 35 are on Amazon. In any event, I thank you for watching. I am Marty Nemko.